Much.
Thank you.
Now to some big news on the big oil giants and how they're missing out on the U.S. oil boom. You would think that they would be way ahead of the game, but new stats show that both Exxon and Chevron are drilling less oil than they did 3 years ago. Here's the thing, though. Today, Shell reported a 60% fall in profit on a $2 billion shale write-down. Who's in better shape? Nick Loris is an economist and energy issues expert at the Heritage Foundation. Great to have you back on the show. Nick, you know, when we look at what's going on in North Dakota, it makes it seem like this whole shale boom and fracking and everything is a piece of cake. It's all sitting there ready to be taken. And, you know, our own production in the country is up so dramatically. But then you look at what's going on with the majors. What has happened? Why are they not getting in on this?
Well, part of it is they are getting in on it, but probably not as much as they want to, because it was really a sprint to the drilling rights, and a lot of small companies that have more flexibility and are more able to adapt were able to sprint to these drilling rights. So you have more small and mid-sized companies taking up the opportunities in places like North Dakota, Texas, Ohio, and Pennsylvania.
Exxon's oil and gas production fell by 6% from the previous year. Chevron down almost 2.5%. Shell, though, did get in on the boom, and then they got punished for it. I mean, they had this $2 billion write-down based on North American shale assets that turned out not to be as productive as they thought they were going to be. How did that happen?
Yeah, and that's part of the process, is understanding where this oil is and how quickly they can get it. And you've seen the drilling costs increase for companies like Shell and Exxon, who really haven't been in the shale game before. So you're seeing some adjustments that these bigger companies have to make with shale oil and gas deposits that they haven't before. And as a result, their costs have increased and their profits are a little bit down this quarter.
Meanwhile, you know, they're pivoting to try and make up for what's happened. You see companies like Marathon says they're pulling out of Libya so they can focus on hunting for shale assets at home, that's a safer bet. What do you think happens going forward? Because to me, it seems like the logical thing would be for Exxon and Chevron and the like to come in now and just snap up the assets of the smaller companies that went in and they did the groundwork and they found where it was working. You know, and now the majors would come in and just buy up those assets. Do you think that's going to happen, or how does it play out?
Yeah, I think a part of that's going to happen, but you have to understand that sometimes the small and mid-sized companies are actually very big, too. Companies like Occidental have a market cap of over $70 billion. So I think they're going to try and do that. I think they're also going to try and expand globally to places like Germany and Poland and China, where we know these shale deposits exist, and they haven't quite been developed in the way that the United States has started to develop theirs.
Interesting to watch. Nick Loris, thank you so much for coming on.
Thank you.